Good afternoon. We are doing it live right here, getting right down to business, doing more at 4 weekday afternoons right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. And tonight, stay tuned at 6 for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be on again tonight at 6 with the CEO of the Union Rescue Mission, Mark Hood. Among our special guests tonight, the former president and CEO of the Union Rescue Mission, the Reverend Andy Bales, with reflections on his 2 decades of work on Skid Row in Los Angeles and the latest on the exciting Just Help One benefit concert coming up on May 14th with music stars including Sheryl Crow. Go to justhelpone.org for the details. Right now, Mottek On Money. We are live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Stocks posting a mixed finish today, and it's the final trading day of the week ahead of the long Easter holiday weekend. With Good Friday tomorrow, the markets will be closed. The blue-chip Dow Jones Industrial Average moving lower after a big drop in shares of United Health Group after that health insurance company reported earnings and delivered an outlook that was disappointing on Wall Street. The Dow coming in for a closing loss of 527 points, settling at 39,142, and we can already tell you that the Dow posted a loss of 2.7% for the week. The S&P 500 ended 7 points higher today, bucking the trend at 5,283 today, and that was a drop of 1.5% for the week. The NASDAQ losing 21 points, settling at 16,286, down 2.6% for the week. This is after a winning week last week when we saw a nearly 3,000-point gain for the Dow Jones Industrial Average, along with some other big moves on the upside, which erased losses that we had on some days last week. Stocks did waver during today's session as the investment world monitors the latest on tariffs, especially involving the U.S. and China. President Trump and other world leaders locking horns on the tariffs. The president also locking horns now with the Fed chairman, Jerome Powell, after the Fed chief yesterday said he's in no rush to cut interest rates, given the uncertain policy backdrop from the White House. And that spooked the stock market yesterday, with the Dow closing down about 700 points. After the Fed chairman pointed to a possibly detrimental impact of tariffs. The Fed chairman said they face a challenging scenario now of rising inflation and labor market weakening, and they can wait for greater clarity before making any adjustments to short-term interest rates. Yields on the 10-year note did move higher today to 4.33%. We did have an earlier close than usual for the U.S. bond market ahead of the long holiday weekend. The European Central Bank making news today, delivering an interest rate cut and indicating that more cuts are likely. This after Fed Chairman Powell signaled the U.S. Fed's in no rush to resume easing monetary policy. President Trump, meanwhile, expressing displeasure point blank with the Fed chairman, comparing the Fed unfavorably to its Eurozone counterpart. President today putting out a social media post this morning ahead of the European Central Bank's move, blasting Fed Chairman Powell as, in President Trump's words, always late and wrong, unquote. President Trump has pushed the Fed chairman to cut short-term interest rates and said the Fed chief's, in his words, termination cannot come fast enough. Meanwhile, there's some progress on the tariff front with some optimistic comments today from the White House, from President Trump and the U.S. Treasury Secretary Scott Bessent, indicating progress toward a trade deal with Japan. In all this, gold kissing record highs again today in Citibank Research, today raising its gold price target for the next 3 months to $3,500 an ounce from $3,200. That's because gold right now is above $3,300 already. Oil getting a pop today, moving up nearly $2, now to $64.43 a barrel. Tensions rising in the Middle East with Iran in focus once again, and more missile attacks on Israel. Dan RAVIV, Middle East expert, former network news correspondent, author of books about Israeli intelligence, including his latest Spies Against Armageddon, Inside Israel's Secret War, will be joining me live later this hour. But first, on your money, the markets, the economy, the whole works now. Joining us live, Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for joining us live here this afternoon.
Well, thank you, Frank. It's been a big week for taxes. We had the April 15 filing deadline, so we were more or less deep in the heart of taxes. and there's been some talk about the trading deficits, but more importantly, and we saw this in the bond action today with interest rates moving higher on, as measured by the 10-year Treasury bond. There's concern that the federal government, again, will run out of enough money to pay all of its bills on time. And but for raising the debt limit, eliminating it actually recently, we would have run out of money as soon as August if lawmakers had failed to suspend the debt limit. That was the 78th time the debt limit has been suspended since 1960. So what does this tell us? It tells us that there is more inflation. There may be stagflation, but there certainly is more inflation. And I think that's what's worrying Wall Street. Wall Street prizes stability. We all like to make our forecasts based on something stable, and that's not the environment currently.
What did you take away from the Fed's chairman's comments yesterday? It looks like the Fed doesn't plan to ride to the rescue. That was the indication yesterday in all this, and now President Trump blasting the Fed chairman, threatening to fire him, basically. That if that were to happen, or if that's even possible, that would certainly be a market-rattling event. Give us your thoughts on this drama playing out between the White House and the Fed.
Well, Frank, by granting the President of the United States that kind of power, it would do away with the central bank's independence and make it 7 governors, including the chairman, appointees of the president like at-will employees. Now, that's the current situation with the Treasury Secretary, but the Federal Reserve is always supposed to be independent. The court is about to take up this issue with regard to the Federal Reserve, and they'll determine whether President Trump could actually fire the Fed chair. This is a 1935 precedent. Those of us who manage money have been looking closely at this because, defanging the Fed, it could create more market volatility and more uncertainty. But in 1935, the courts barred Franklin Roosevelt, then President Roosevelt, from firing members of the Federal Trade Commission for purely political reasons. They served as like a quasi-judicial branch, and the Federal Reserve is one of those. So as Fed Powell pointed out in his comments, it is the law. The independence of the Federal Reserve is the law. And I understand the stagflation. We see the postage stamp indicator, pretty good and old-time reliable indicator of real inflation. We're seeing stampflation. The stamp prices are set to go up again in July. They're since 1985, when the stamp was 22 cents, it's only gone higher. It's now 73 cents. It's set to go higher. That's real inflation. It's more than the kind of inflation that we see the government reporting.
On the air live with Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. This is really something the Wall Street Journal reports. President Trump has spoken with the former Federal Reserve Governor Kevin Warsh about possibly replacing the current Fed Chairman Jerome Powell before his term expires. But according to the Journal, Warsh has advised President Trump not to fire Fed Chairman Powell or interfere with his tenure. According to the Wall Street Journal, Powell's 4-year term, by the way, is set to end in May of next year. Now, it's also been widely reported that President Trump likes Kevin Warsh and looks like he might be in a good position to replace Fed Chairman Powell at some point. What do you make of this latest news?
Well, I think it's very interesting. Powell was a Trump appointee, and I think most of us feel that on balance he's done a pretty good job. They rely on something called the Fed dot plot, which doesn't have a very good forecast track record, and maybe that's why interest rates remained so low for so long. And we had all this inflation. Now we have shrinkflation, which some are saying are reactions to tariffs, gadgets that are sold without batteries, that were sold with batteries. We're seeing that. We're seeing big packages, but less of whatever it is that you're trying to buy. These are strategies retailers and brands have been using. And Powell and the Federal Reserve are looking at all of that. What is the real rate of inflation? So my own personal view is that the president should let Chairman Powell just play out his term. May of next year comes soon enough.
On the air live with Gabriel Wisdom. In all this, gold got another pop today and is now above $3,300 an ounce, $3,341 an ounce. Looks like a lot of the big brokerage firms are adjusting their predictions on where gold goes from here higher at this point. What's your reaction to this big move, this ongoing move in the price of gold to record highs?
Well, Frank, I've been, in favor of buying gold for the last year, not because I have a crystal ball. I don't. It's just that intrinsically, gold was undervalued. It's also been a pretty good predictor of inflation. For example, for a couple thousand years now, 1 ounce of gold has bought around 350 loaves of bread. And, so what is the price of gold telling us? It's telling us that, bread right now should be $10 a loaf, or $8 a loaf, to bring us to $3,100 or whatever it is per ounce. But if Wall Street brokerages and analysts are forecasting $3,500 an ounce, they're forecasting higher inflation. And that's what I see as well. And this is the conundrum with the Fed and with the administration.
I thought you were going to say gold is telling us that we need to raise the dough somehow as the price of gold moves up and the dollar is weakening. So the point was made on this program this past week that it's not so much gold is hitting record highs. It's that the dollar is tanking against other currencies. And normally a weaker dollar is good news for the stock market, right? Because it makes our stuff less expensive overseas, and we usually see big rallies. But what's happening now, and where do you see the dollar go from here?
Well, it's not. There's a disconnect. Same with gold. Usually, gold does well when interest rates fall, but interest rates have been rising in the open market. The dollar should be strengthening, not weakening, but it has been weakening, and it has to do with uncertainty. A 20% tariff on all imports, including goods and services, would raise less than $1 trillion over a 12-month period. Those are the numbers I've seen. That's at a 20% rate. That's not enough, not really, to reduce taxes. You'd need 100% tariff to raise the $5 trillion that's necessary to get to a much lower tax rate. So this kind of uncertainty has foreigners backing away from the United States. I think the president, I suspect the president, the current administration, already knows this, and I think we'll see some positive surprises in the next few months. I'm hoping for it.
All right, this uncertainty certainly unnerving for people in the pension business, right? We know people in that business, and we've done various conferences together in that type of setting. But with this kind of volatility and uncertainty, that's a tough business to be in at the moment. What is your guidance to get through this turbulence?
Well, I would take advantage of the interest rates that we currently enjoy, and I might expect them to go higher. Interest rate cycles are very, very long. They have long tails, and this upcycle has only just begun. It's maybe 4 years into it, and they have in the past lasted 15, 20, even 30 years. Declining rates, rising rates. Jamie Dimon, CEO at J.P. Morgan Chase, called it a kerfluffle in the Treasury markets because of all the new rules and proposed tariffs and so forth. And, President Trump has acknowledged all of this by postponing the tariffs because of the bond markets are a kerfluffle. But the biggest seller of U.S. Treasuries has been our own Treasury. We sold $39 billion of 10-year notes last week. and other countries might not be buying as many treasuries. Certainly, if the trade deficit evens out, if they have a trade deficit and we have a trade surplus, so they won't have the money to buy our treasuries. What happens? Interest rates go higher. So I think investors should stay with short-term treasuries for the fixed income portion and be buying dividend-oriented stocks now that they're cheaper.
Very interesting, and looks like the volatility in the bond market is what got the White House's attention last week, putting that 90-day suspension on some of the previously announced tariffs. And then suddenly we heard about credit default swaps, something we haven't heard about since the financial crisis. Suddenly that term popped up again. What do you see happening in the bond market given this unusual volatility nowadays?
Well, I wouldn't get too excited about it because this is really the first manufactured bear market, and certainly in our lifetimes. The bear markets and bond disruptions have almost, in fact, they've always been the result of a credit crunch, a short of capital, recessions, some very, a black swan type of surprise, something that no one had seen coming, like COVID, for example. And we don't have that now. We have an effort to raise revenue by imposing tariffs on 60 some odd countries, and so that's why the bond market is telling us that there's just too much uncertainty and rates are likely to go higher. That puts the Federal Reserve in a very difficult position.
The Sean Ryan Show Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
What do you think of working with the SEALs? We went out every night going after bad guys. I was humbled.
There was no going back home.
I would be in another room crying because I was afraid to go to sleep because of what was coming for me in the middle of the night.
How long did it take you to be able to talk about it?
A long time. But I realized my experiences may help other people too.
The men like yourself are considered legends in the community.
You're right.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
On there live with Gabriel Wisdom with American Money Management. In all this, we see crypto is quite volatile as usual, but Bitcoin holding up pretty well today, back to around 85,000. As you know, we talked to the biggest cheerleaders of crypto as well as the harshest critics. I know you observe what's happening in the crypto space, but any thoughts about what's happening with crypto now?
Well, it's a real asset, Frank. And I think this U.S. Bitcoin reserve idea that might sound pretty far-fetched to a lot of people really isn't. As I mentioned on your show not too long ago, countries around the world have already been stockpiling much stranger things. Here in the United States, I mentioned that we stockpile the dairy products. We have stockpiles of cheese and helium, and in the Nordic countries, they have seed vaults. There's a seed vault in Norway to protect against the loss of crop diversity. And for a U.S. reserve of Bitcoin, it's not something that surprises me at all. I think it would be helpful for investors in crypto to have some stability. It hasn't been all that stable, though. The overall trend since 2019 has been very, very positive, up over 1,100%.
All right, final question here, the big one. Any specific places where you are putting money now and or taking it off the table?
Well, we had a big kerfluffle today with United Health. Shares of United Health Group, the largest company in the managed healthcare industry, was one of a handful of the best performing stocks of the year. And of course, today it dragged down the entire market down over 20%. But healthcare generally has been the second best performing sector in the S&P 500. The healthcare services area is up 22%. Managed healthcare is up 10% year to date. Biotechnology is up a little over 1%. I like the healthcare sector, especially those areas that have been beaten down. United Health Group has the lion's share of Medicare Advantage business, And the Trump administration announced last week that its reimbursement rates for Medicare insurers are going to be far higher next year than expected. So United Health might have been overdone, though. I'd watch it before I buy it. I also like some of the dividend aristocrats that have been beaten down, and there's a number of them that look very attractive. These companies that raise their dividend every year, year in, year out. Microsoft, MasterCard, Apple is looking good again, Intuit, and finally Costco and Visa.
United Health stock, as I mentioned at the beginning, took that big drop today, down about 22% on the day, down nearly $131 a share to $454 and change. Would you be touching it here at this level?
Yeah, it certainly it got my interest because it's been a great company. As I mentioned, it's the largest company in the managed healthcare industry. It's one of the Dow 30 companies for good reason because of its influence. We saw what it did today to the Dow. I mean, it's a major component. If the current administration is going to increase reimbursement rates for Medicare insurers, United Health has over 20% of the Medicare Advantage business. And there's the aging of the baby boom generation. Everyone's going on Medicare who can do so because you've been paying into the system, and you get some of it back through Medicare. And doctors are happy to take it. So I like the healthcare industry in particular. I'd be watching United Health and see how it acts next week.
Gabriel Wisdom, Managing Director of American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel, thank you very much for wrapping up this holiday shortened week. We wish you a great holiday weekend and look forward to speaking with you again very soon. Thank you very much for taking the call here today.
Thank you, Frank.
Out to the freeways now, 790 KBC.
Tuxedo waiters, black tie.
The LA County Fair is back, celebrating its 103rd anniversary, May 2nd through the 26th. Don't miss the LA County Fair Concert Series. Tickets on sale at the LA County Fair. LACountyFair.com is their website. Right now, caller 9 wins at 1-888-795-2222. That's 1-888-795-2222. You can get a pair of tickets to the show to see Chris Young on Sunday, May 11th, if you're caller number 9. Call now. 1-888-795-2222. Tickets furnished by the LA County Fair. Mixed finish for stocks to wrap up the holiday shortened week. The markets will be closed tomorrow for Good Friday ahead of the Easter holiday weekend. The Dow coming in for a closing loss of 527 points to 39,142. The S&P 500 up 7 to close at 5,283, and the NASDAQ down 21 at 16,286. Another seesaw session for stocks. The yield in the 10-year note is back up to 4.33%. That's the one that impacts the fixed-rate mortgage rates, and we'll talk mortgage rates and real estate coming up here shortly with Jeff Lazerson, the president of Mortgage Grader and the Orange County Register real estate columnist. Right now, Bitcoin moving slightly higher, just shy of 85,000. Ethereum hovering at around 1,585, and Doge at 15 cents. Gold getting another big pop today, right now hovering at around $3,341 and change per ounce. Silver above $32 an ounce, $32.54. And now the latest news in 790 KBC. Mottek On Money continues here, 790 KBC. A couple of weeks ago, it looked as if we were going to have a mortgage refi boom based on a drop in mortgage rates because benchmark U.S. Treasury note yields took a tumble. But now suddenly, mortgage rates are back up. In fact, the highest we've seen in a couple of months. Builders, meanwhile, expect costs to rise, but they are cutting home prices in certain locations. Housing starts have dropped by the most seen in a year in one-family homes. A lot to unpack here with Jeff Lazerson, who joins us live now, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for coming to the line here this afternoon.
Thanks, Frank, for having me.
All right, take it from the top. Jeff, how are the rates looking now?
Oh, Frank, it's like a pinball machine bouncing around. You know, it's up, it's down. So the 30-year conforming fixed up to $806,500, 30 years at 6 3/8%. The 15 years at 5 5/8%. Then in LA and Orange County, the Fannie Mae high balance or the Fannie Mae jumbo goes from 806,501 to 1,209,750, and that's at 6 3/4 for a 30-year and 5.99% for a 15-year. Jumbo rate is at 6 7/8 right now, so that's anything over the high balance. And there is an honorable mention today. The ARMs are something to start looking at again. There's a 7-year ARM out there under 6% now, and so don't be afraid of that. 5 years or 7 years is a long time, and certainly you'll be refinancing the loan or selling the property before then.
All right, ARM means adjustable rate mortgage, and looks like they have renewed interest now, right? Because of the volatility we've seen in these Treasury yield, these note yields impacting the fixed rate. So what do we need to know about ARMs these days? And remember, during the financial crisis, adjustable rate mortgages had a pretty wide meaning back then. Tell us more about the adjustables here and the choices.
Well, the bigger problem is the fixed rate mortgages that are tied to the 10-year Treasury. And people don't want to lock up their money for 10 years because how things are bouncing around with the stock market and the bond market. And so shorter term money is safer for investors right now. So that's why the adjustable loans are coming back in vogue. And the other thing that's really scary is normally other countries around the world buy our bonds, and this time around when the stock market tanked, China and other countries were they sold our bonds and they went and bought gold or something else. And so normally it's a safe haven, and it's this flight to quality, and boy, not this time around. So it's really scary.
That's very interesting. We're on the air live with Jeff Lazerson, the president of MortgageGrader.com. Where do you see the rates go from here, Jeff? Are we going to be hovering higher here now, or what's your view on where things go from here?
Well, I think the column I wrote about this week was stagflation. And if you remember the Jimmy Carter days, so that's high inflation, rising unemployment, and a slow economic growth. So all those are recipes for things to slow down, and the way that you combat stagflation, the best way to combat it is like what Paul Volcker did back in the day, where you just jack up rates so much that it just kills all spending. So it could go that way, or the other way it could go is it could really crash, because if the economy gets really soft really fast, maybe they will drop rates. But I had one person I interviewed, she said, Jeff, she said, I could see rates at 5%, I could see rates at 8%. The Wells Fargo fellow that I interviewed, he said that Wells is plugging in 1/4 to 3/4 increase in rate. So that would put us, somewhere at 7.5%, 7 3/4%.
NBA veteran Jim Jackson takes you on the court.
You get a chance to dig into my 14-year career in the NBA, and also get the input from the people that will be joining. Charles Barkley.
I'm excited to be on your podcast, man. It's an honor.
Spike Lee, entrepreneur, filmmaker, Academy Award winner.
Knicks fans.
So, now you see, I got you. But also how sports brings life, passion, music, all of this together.
The Jim Jackson Show, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
And those people at Wells, I like what they have to say. They're really smart guys, and so I pay attention to that.
Very interesting. And as far as home prices are concerned, given this environment, are things starting to level off, or what do you see ahead on the price front here?
They're really not. I mean, they're still going up if it's a good property, if it's a clean property. They're still selling. There's still multiple offers. I'm looking at my board right now. I have 4 deals on there in escrow that they all had multiple offers. And so the people that are committed to buying and they have the money, they're just doing it. And the people, then there's a whole other group of people that are, maybe now or maybe we wait for later, and they're getting a little shook up because they're losing money in the stock market, Others are a little shook up because if things get worse, there's going to be layoffs out there, and is their job going to be next? So we're starting to see less confidence, I would call it. I'd say a real dive in consumer confidence from people that I talk to. I have a stack of files of people that are pre-approved, and one group is out looking hard, and there's a whole bunch of others that are just sitting on the sidelines for right now.
Very interesting. In the meantime, it looks like rents have spiked. A report came out today saying that following the firestorms in Los Angeles, looks like rents, looks like LA is leading the rental price increase nationwide, up about 7%. So that is certainly, that might spur some more people to look into home ownership rather than paying rent, right?
Yeah, and it's a darn shame, Frank, because a lot of the people, the first-time buyers, I hear this so often that the rents are so high, so expensive, it makes it really difficult for them to save money to purchase a house. Yeah. And, of course, one answer to that is, not having to rent. There's plenty of zero-down loans out there now. I have a whole menu of them. And so, that's something that people don't really realize. They might not have to rent. If you have good credit and you have good income, you can get in with zero down and get yourself a nice place. And it just is a matter of education because rents just keep going up.
Jeff, thank you very much for taking the call. We wish you a good holiday weekend and look forward to our next update. Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you again very much for joining us live here this afternoon.
Thank you, Frank. Take care.
You too now. And out to the freeways we go, 790 KABC. Mottek On Money continues here on 790 KABC. It's a nervous world these days. Oil moving higher, up more than $2 at 64 and change. Gold at a record high above $3,300 an ounce today. The Middle East, certainly the focus of a lot of attention, of concern and uncertainty. The U.S. now exerting maximum pressure on Iran to drop its nuclear program and to stop funding terrorism around the world, including Hamas and Hezbollah. All this as the Israel-Hamas war continues, which Hamas started with the terror attack on Israel back on October 7th, 2023. And Iran-supported Houthi attacks continue as well. Joining us live now to discuss the latest, Dan RAVIV is with me live now, Middle East expert, former network news correspondent, author of books about the Israeli intelligence service, including his latest, Spies Against Armageddon, Inside Israel's Secret War. By the way, has another book coming out soon titled The Quest for Significance. He also has an excellent podcast, by the way, on the Middle East. The podcast is titled The Mossad Files. Dan RAVIV, thank you very much for taking the call here this afternoon.
Thank you, Frank. Great to be with you.
Wonderful to have you with us. I know you follow this very, very closely. The U.S. and Iran, I understand, will be continuing talks about Iran's nuclear program this weekend after the first talks started last weekend. Any update on what happened last weekend and what might be ahead heading into this weekend?
Well, we actually have two sources, the two men who represented their countries. President Trump's friend, the businessman Steve Witkoff, now officially a negotiator on so many topics for the Trump White House. Steve Witkoff was in the Arab country of Oman. He had indirect talks with Iran's foreign minister, meaning notes were passed back and forth by the government of Oman. They did have a brief face-to-face conversation. Now, Witkoff says that it was a promising start and that he passed on to the Iranians that they could do some low-level enrichment, way, way below weapons-grade uranium. But there were a lot of supporters of Israel who say, well, no, that's no good. So Witkoff then issued a tweet this week that says, in fact, the U.S. is telling Iran it has to get rid of all of its enrichment program. Now, as for Iran's foreign minister, he also said it was a decent start, but that the Americans did not make clear what they want. I think it's just the Iranians saying that, and Iran's supreme leader says he's very pessimistic about any talks with America.
On the You're Live with Middle East expert Dan RAVIV, a familiar voice to radio listeners around the world. And Dan, thank you very much for that assessment here. So the tone certainly very stern as far as the U.S. is concerned, a hard line here. What do you think is going to happen with these talks?
Yeah, well, I'll tell you, and I'll think about the economic fallout for your listeners who, specialize. This is, after all, Mottek On Money, and that is that if there could be a breakthrough, another agreement with Iran, maybe similar to the one that President Obama reached in 2015, Trump did not like that and tore it up in 2018. He may be going for something a little bit better, but if there could be an agreement, then I bet it would include lowering the sanctions against Iran. Iran would be allowed to sell more oil on the market. That could push down the price of oil. That would have a real impact. But if the talks fail, Trump is hinting, no, I would say he's saying, that the consequences would include an attack on Iran's nuclear facilities led by Israel. He says the U.S. would support that and maybe even take part. And obviously that could trigger a wider war in the Middle East, and then we'd have the price of oil going way up. So it's very important, and we only have the second session of the talks day after tomorrow.
Things could develop quickly. Is that your impression here? If Iran does not agree to dismantling its nuclear program, it's clear that President Trump will not allow Iran to be a nuclear country. He said that repeatedly. Not have a nuclear weapon, certainly.
Frank, let's point out, Frank, that the president also made clear this week he wants the talks to move more quickly. He doesn't want Iran to just waste time while it's secretly working, perhaps, on a nuclear bomb. And so President Trump is insisting it go quickly.
In the meantime, Israel continues to come under attack with Houthi rockets, and violence continues to flare even over the Passover holiday week and the Holy Week heading into Easter Sunday. Give us your latest information about what's happening on that front.
Yeah, sure thing. The Israelis feel that they're achieving real progress in the Gaza Strip, killing some more Hamas leaders. But, of course, some civilians are dying as well, and that makes Israel unpopular in many places. Meantime, the Israelis have not found any more of the hostages. 59 hostages still being held in the Gaza Strip, and there's a lot of pressure on Netanyahu. Even a letter by major reservists in the Israeli army saying, stop the war, make a deal to get the hostages out. So it's a very tense time in Israel right now.
And congratulations on your latest book. I'm going to mention it here and give the audience a preview. The Quest for Significance. Are you able to preview it for us here live on the air?
Yep, it's coming out this coming week, and I think, again, a business-oriented audience might get a kick out of a major point that we make. There's more to life than money. What? On Mottek On Money, yeah, every human being seeks to make his or her life significant, to get some dignity, to get some meaning, for their life to matter. So with my co-author, very major expert on human motivation, Professor Arya Kruglansky, The Quest for Significance says, rich or poor, philanthropist, terrorist, whatever you are, you can find some meaning that makes you feel good about your life. It doesn't have to be money, and our other advice is figure it out for yourself, and then talk to all the people around you. Figure out what's important to them. If you give them the significance they need, then you'll find it reflected back on you. So we describe what we think is a win-win situation for workplaces, right, families, and all relationships. I found it very interesting to take.
We're going to invite you back for a full conversation about that. Congratulations on that. Dan RAVIV, Middle East expert, former network news correspondent, and is one of his latest books, and you heard about the very latest. I just heard about it, the Spies Against Armageddon, Inside Israel's Secret War, and the podcast he does is the Mossad Files. Check it out. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and then at 6, it's the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back at 6 right here from 790 KBC.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
September 11th happens. What is the first thing that went through your head? September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope?
Just learning how to find a new normal.
One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.